So we are going to be preparing the statement of stockholders' equity. So this is like what is the value of our company? This was like your individual owner's equity section in the last unit. And so this is shows the corporate's ownership of the fiscal period statement of stockholders' equity. And the three main places that we're going to get information from is from your general ledger for your whenever we do stuff with the capital stock. And for retained earnings, we'll get that information from the adjusted trial balance and the income statement. So the bottom and the top one are going to help us with our retained earnings. The middle one's going to help us with our capital stock. Plus, they will also tell us some extra information sometimes in this process as well. So let's go ahead and look first. We're going to look at the capital stock. And the value assigned to the share is printed on the stock certificate's par value. When issuing shares of the stock, corporation can also assign par value laws, which the state which it's incorporated. The title of it is going to be the name of the company, and it's going to say Statement of Stockholders' Equity for the year ending in December 31st, 2000, whatever the year might be. And that first section we're going to have on our Statement of Stockholders' Equity is going to be your capital stock section. And so you'll identify what the par value that's going to be told to you. We're going to find out how many shares have been issued at the start of the year, and you'll take the 7,000 times your par value. That gives you the 70,000. And then, how I was telling you in that general ledger, you'll find any stocks that are issued throughout the year. And so this year they issued 500 extra shares. So we do 500 times 10, and that gives you 5,000. And then we will total it to find the balance at the end of the year and the total number of shares issued. So there's 7,500 shares issued, and our total is 75,000. Next, we're going on to retained earnings, and retained earnings are going to be obtained by looking at your adjusted trial balance and your income statement. And so your retained earnings section is going to be titled as retained earnings, and you're going to find your beginning balance. This is going to come from your income statement where it says the net income after federal income taxes. You'll have to look for where your dividends declared off of your adjusted trial balance and anything that's stated to you, and increase your retained. If it's an increase of retained earnings, that means you have a net profit. And that means that you're going to increase your retained earnings. You could also have a loss, which would decrease it. You will add those two together, and that is your balance as of the end of the year. And then the total stockholders' equity is the number of the par value of the shares outstanding, plus the balance of retained earnings at the end of the year. And that's your total stockholders' equity. So let's go ahead and go into working a problem. And what's wrong one? I've already started it. We have the Superior Corporation Statement of Stockholders' Equity, and for the year ending December 31st. So after we filled in the December 31st, 2000, the first section is the capital stock. And per the information above, it's at par value is $10 per share. So that's what goes here. It says that 8,000 shares of capital stock were issued as of January 1st. So January 1st, 2000, 8,000 shares were issued. And that makes us $80,000. During the current year, it says that they have issued an additional 250 shares. And so when we multiply that by the $10 par value stock, it brings up to 2,500. The balance as of December 31st, 2000, is the total of those two numbers, which is 8,250. And we're going to, again, total those two numbers, 82,500. And then that was for your capital stock, and that can come in from information above, or they may give it to you via your general journal information. The next section is your retained earnings. And it's your balance at the beginning of the year. Earnings. It's the beginning of the year, January 1st, 2000 and we will find that information. That information comes from your adjusted trial balance, and it's at $15,283.40, and that was the beginning amount. And then we had the net income after the federal income tax, which is going to come from your income statement. You go down to your net income after federal income tax, and that number, $73,148.80. Oops, I didn't copy. Comes over. Oops. None of those numbers copied. Let's see, that was the 15,283 and 40 cents. And then we're going to subtract any dividends declared in 2000. And it said, and then we're going to pull that information from your dividends, and it says we had 12,000 in dividends declared. And we had a net increase because we had a net income, and it was greater than or less our dividends declared. And so this is a net increase, 148, 61,148, which brings our balance at the end of the year to be, when we add these two numbers, we get $76,432.20. And then our total stockholders' equity as of December 31st, 2000 is, we're going to add our capital stock plus any of our retained earnings, and gives you $158,932.20.